Hi, this is Chris Moore, your Century 21 Realtor, and welcome to the November update for the Oklahoma City real estate market. So a lot of folks are paying attention right now to interest rates, and we have had another increase from the Fed. This has been a very aggressive series of increases as the Fed tries to stop inflation numbers. And the effect in the end is right now, we're at about 7.25% interest rates. That's what we see clients locking at right now. And the market was at 5% interest rates when it hit its peak back in June of this year, just a few months ago. The overall impact of the rates we expect will be temporary as it bears on our local market. Some of the bigger factors that we're going to see in the months ahead include jobs, inventory numbers, and just the demand, how many people want homes in our area. So those are going to be the more important numbers to look at. Also, let's look at a big difference between Oklahoma and the rest of the country right now. I want to encourage you to pay attention to local numbers and don't worry about the national news. Here's a great example. You can see in the numbers to my right that the difference in monthly payment for a house at $250,000 in our market is only about $290 per month. So it's from $1,074 per month at a 5% interest rate to $1,364 at a 7.25% interest rate. This is not an obstacle that can't be overcome by serious buyers in our market right now. When we compare this to other markets where an average home price might be closer to $1 million, the monthly difference is over $1,100 per month. So the rate impact in these markets that are outside of our area is much more significant. And these areas tend to be the markets that are in the news more. So when you see national news or you see the generic syndicated news stories, those are going to pertain to these larger markets. So I want to encourage you, pay attention to the local numbers, pay attention to resources like this one where you can get a feel for what's really happening in our area. Okay, now let's look at inventory. Right now, the Oklahoma City area has a 14-week supply. This is up from a 9-week supply the prior month, and it's up from about a 6-week supply when the market was at its peak earlier this summer. Right now, the average days on market is 26 days. This is up from 14 days earlier this year when the market was at its peak. The fast sales are happening right now during about the first 2 weeks on market, whereas earlier this year, that was happening day 3, day 4. So you are seeing a shift as far as the time that it takes for a home to go under contract once it enters the market. Let's talk about list to sale price ratio. This is a great way to get the temperature of the market overall. So earlier this year, when the market was at its peak, we saw list to sale price ratios at 102% on average. In some of the more high demand areas, we were seeing it as high as 104%. Right now, the average list to sale price ratio is at 98%. And believe it or not, that's a really normal number for our market. For years and years, up to this accelerated spike that we had in the Oklahoma City area, 98% was a really typical list to sale price ratio. Another way you can say that is we normally saw a 2% negotiating margin. Home values are still on the rise in our area. Right now, the average sales price is $281,000. Compare this to last October when the average sales price was at $264,000. This is an increase of 6% year over year. And finally, price per square foot. As we closed out October, the average price per square foot was at $150 per square foot, compared to last October when the average was $138 per square foot. That's an increase of 9% year over year. Thanks for joining me for this month's market update, and tune in next time as we take the market and break it down.